Welcome back, folks. So the CPI report has been released for August, and the numbers were pretty much in line with former July numbers. July inflation was at 2.3%. August inflation came back at 2.5%. So there's a slight uptick in inflation, but 0.02%, and it's not concerning. That's another affirmation for the Federal Reserve that the inflation is staying steady. It's not getting out of control. So with that said, the reports that the Fed is going to cut interest rates on September 18th meeting, which is in a couple of days or so, in about 5 days to be exact, that is dead sure confirmed. Now, I want to show you some data going back till March, the beginning of the year, and I want to make a case to you that there's going to be 3 interest rate cuts. A lot of folks are saying that there's going to be a big 50 basis point interest rate cuts in September, and then maybe nothing for November, December, maybe some big cuts in November or December. But I want to show you some evidence that I have collected based on my research since March of this year, what I'm trying to prove here with some evidence. So I'm going to show you a video that is from the Federal Reserve meeting, Jerome Powell speaking in the March meeting. And let me give you a brief recap of what he's going to say in this clip. He's going to tell you that they're planning, if everything goes as smoothly. They always say, we have a dual mandate, lower in unemployment and stable prices, inflation under control. So as long as a dual mandate is sustained and they can keep their focus on it, they aim to have 3 interest rate cuts in 2024, some more in 2025, and then some more in 2026. And then he'll show you a chart of how they're planning to break those interest rate cuts out over the next couple of years, starting with 2024. So let's watch the video, and then we'll come back to chat about it.
We will continue to make our decisions meeting by meeting. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 4.6% at the end of this year, 3.9% at the end of 2025, and 3.1% at the end of 2026, still above the median longer-term funds rate. These projections are not a committee decision or plan if the economy...
Now, as you saw in the video, he broke down the interest rate projections over the course of 2024, 2025, and 2026, and the longer run, going back to the chart. But before I go to the chart, I want to say one more thing. After Jerome Powell's meeting in March, in April is almost like all the Federal Reserve Bank presidents were also given the same information. So you would see them covering the same topic and the same information that the Jerome Powell had given out in the March meeting. So they're basically reiterating the same communication out in different press conferences and different public meetings. So I'm going to show you a clip from April where the Federal Reserve Bank of San Francisco president, Miss Mary Daly, I believe her name is, she talks about how the 3 interest rate cuts by the end of the year are a reasonable thing to expect. So let's watch that video.
The Fed has indicated it expects 3 interest rate cuts this year. Is there any reason to doubt that will still happen?
So I think that is a very reasonable baseline, but I would like to say here that this is a projection, right? 3 rate cuts is a projection, and a projection is not a promise. And I think that's really important because a projection is saying, here's how the economy is expected to evolve, and here's how policy evolve should that occur. But you have to maintain this ready position, and I feel like we're in a very good place to be ready. We have to be ready for what if inflation's stickier than we projected or I projected. If I look at my projection and I say, well, what if inflation's stickier?
So as you saw in that video that the talk was about 3 interest rate cuts by the end of the year, We only have September, October, November, December, roughly 3.5 months left. So with that said, let me take you to this chart that I stole from the March Federal Reserve meeting, and it breaks down the interest rate projections. So by the end of 2024, they're projecting the federal fund rate to be at 4.6%, and then in 3.9% at the end of 2025, and by the end of 2026 we plan to be at 3.1% interest rate. So that's their plan. One more thing that I wanted to draw your attention to are the probabilities for the interest rates and what size of interest rate cuts we should expect. So in September, you should expect an interest rate cut. There's a 57% chance of an interest rate cut of 0.25%. In November, if I can pull that up for you, in November, the probability is 51% for an interest rate cut of 0.25%. And in December, the probability is that of 41% to have an interest rate cut of 0.25. So right now, the 0.25% basis points cuts are very much supported by the market. The projections are there, and we'll see how the situation develops. With that said, please like, share, subscribe, and we'll bring you more relevant info as it becomes available. Thank you.